Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at the financial sector, we're going to look at XLF, then FAZ, which is the 3-time bear ETF. Not going to look at FAS because the chart is pretty much the same as XLF, what it is trading based off of. Then we'll compare BAC and JPM. And that's that. So let's start with XLF. We are getting very, very tight, and this pattern is pretty much the exact same as we're seeing on the S&P 500. We have the high, we have the low of the Fed day consolidation, lower high, higher low, tightening range. And it's very clear that the volume is tapering off due to the holiday weekend, but it's also tapering off because that is very common when you have tightening ranges reaching an equilibrium before a clear break. And the clear break is accompanied by a spike in volume. So as of right now, a break of 23.18 would be a bear break, and we would likely lose this middle Bollinger Band support, which is going to be right around the low 23.20s this coming Tuesday. Or if we get a bull break above 23.67, the recent high, we'll be looking for continuation. So the bulls did close at the high of the day on Friday, but obviously it was tiny volume as nobody was trading. And we're watching very closely. If the overall S&P 500 consolidates, we are looking for the financial sector to be a potential consolidation candidate as well. And in that instance, we'll be playing FAZ, which we will look at here in just a moment. So XLF on the weekly, we had a bearish reversal candlestick, and we did not confirm it. So this does look like healthy, bullish consolidation and a potential little bull flag before continuation to the upside. So again, as long as the S&P 500 stays strong, we anticipate the financial sector to stay strong as well. So if it does not, and if we see the S&P 500 break the low of the Fed consolidation, for SPY that's 224.04, then we're looking for FAZ to see a short-term bounce. And obviously the trend belongs to the bears without a doubt. We've had exponential resistance here. The 4 and 8 period have been driving down the price for almost 2 months now. That's a very long time. And we need to see a close above that level. The level to break is 22.07. That's the highest price we've seen on this bounce attempt. We are building a base of support down at 21 psychological. You can see we've dipped below it a couple times, but we keep recovering that level. So building a base at $21. It's essentially a descending triangle where we have some lower highs and a flat horizontal base of support. So we'll be watching the middle Bollinger Band resistance. That will be the first resistance to look at if we do break 22.07. And we'll see if the bulls can amount a short-term rally. Bullish reversal candlestick on some solid bull volume last week. No confirmation this week, but we do have an inside candlestick to be watching. And we'll be watching the range of that candlestick. And again, that's pretty much the same thing on the daily time frame with this tightening range. It's just showing up as an inside candlestick on the weekly. So very clear break is likely coming in the short-term future. We'll see if it happens in the 4-day trading week coming up. But if not, should certainly happen right in the new year. So comparing a couple of the banks here, BAC, it was one of the strongest on the breakout, but it's now lagging behind a little bit. And we'll compare it with JPM. But it's the same pattern, getting very, very tight, low volume, And the key support here is 22.21. Same thing, we will lose the middle Bollinger Band if we break that level. And resistance is the high we've seen, 23.39. So a tightening range, the weekly time frame, inside doji of indecision. It is still a bearish reversal doji because we are at the top of an uptrend, but it's an inside candlestick. And if we were to break 22.33, we would be looking for further consolidation from there. So you can see the magnitude from the movement to the upside on that breakout. One thing we want to compare it to, and we'll just throw it up on the monthly chart because we need to look all the way back to 2008 here before the crash. And you can see that we are not still at those levels. So before the crash in 2008, we were up at 36, 35. So here we are at 22, still a long way to go away from those levels. Not a ton of resistance up here because of how quickly we did drop, but it just wanted to show that we do have a long way to go. And let's just compare JPM real quick before we break down JPM on the daily and weekly. Let's compare that monthly time frame and see where we stand. And we are at all-time highs. So it's a much different scenario. And you can see this clear resistance at $40. Once JPM got over $40, the bulls were in absolute full control, and it's been nothing but up since then. So a very big difference just in terms of previous price history, where JPM has no resistance up here and BAC still has all kinds of resistance, even for another 50% move to the upside from where it stands. So if you could choose one or the other to be a bull, you'd want to choose JPM just because of where it stands long term. So let's look at JPM now on the daily time frame. And we can see it's more bullish. So let's compare again. BAC, slight little downtrend, very tight range, not much going on. JPM, bullish all week. And it closed pretty much at the high of the week. It is a bearish reversal doji at the top of an uptrend. So a red day would confirm some pullback. But as you can see, we have higher lows and higher highs, whereas BAC has lower highs, higher lows, tightening range. So the uptrend is still very much intact. Key support is 84.19. and 83.76, the low of this consolidation. As long as every time we consolidate, we form a higher low compared to the previous consolidation, the uptrend is still intact. So all-time high, 87.17. We topped out at 87.15 on Friday. And the weekly time frame, negating the bearish reversal doji, continuing to the upside, and we ended up closing just below the upper Bollinger Band. So that is still resistance, and that's going to open closer to $88 this coming week. But JPM, blue sky breakout, looking fantastic for the bulls, and no slowdown in sight with one of the strongest bank daily charts and longer term charts as well. So that's a little rundown on the financials. Again, I think the overall correlation to the S&P 500 is going to be a significant factor as to what we see in the short term with this tight range on the XLF sector spider for the financials. So I appreciate you watching. I hope you have wonderful holidays, and we'll see you next week.